Most investors look at IREN and see a Bitcoin miner. They see volatility, they see a crypto proxy, and they look away. But what if they're wrong? While the mainstream media is still fixated on the next crypto halving, Microsoft just handed this company a $9.7 billion anchor contract. We aren't looking at a miner anymore. We're looking at a 3 gigawatt power fortress. Today, we're looking at why the April 2026 Sweetwater energization changes the math on this stock forever. This is a structural analysis of market signals, not a recommendation to buy IREN. My goal is to show you how to find alpha in places others aren't looking. Everyone wants to find the next Palantir or Nvidia before the run-up, but when it's staring them in the face, they blink. Wall Street analysts are stuck. The crypto analysts think IREN is too focused on AI. The cloud analysts think it's too tied to Bitcoin. Neither side knows how to model a hybrid infrastructure play that owns its own power. To me, this isn't a crypto play. It's a utility play disguised as a tech stock. While retail is panicked over Bitcoin cycles, IREN just secured the one thing money can't buy overnight: power capacity at scale. It's 2026. The data has shifted, but the price hasn't caught up. The market sees a vendor, but I see the machine. Let's talk about the number that should have broken the internet: $9.7 billion. This is a binding GPU cloud agreement with Microsoft. It isn't a pilot, it's an institutional validation that IREN can provide infrastructure at hyperscale. But here's the signal everyone missed: the 20% upfront prepayment. Microsoft just cut IREN a check for $1.94 billion in immediate liquidity. They're using that cash to secure NVIDIA GB300 Blackwell Ultra chips without relying on dilutive equity markets. Management is targeting $3.4 billion in annualized recurring revenue, ARR, by the end of 2026. This is the stamp of approval that turns a miner into a Tier 3 equivalent infrastructure asset. Microsoft doesn't sign these deals on a whim. This followed months of forensic due diligence. That Microsoft's seal of approval is now the ultimate lead generation tool for the remaining 350 megawatts at the Childress campus. In the AI race, everyone's obsessed with GPUs, but GPUs are a commodity. If you have the cash, you can buy them. You know what you can't just buy in 2026? Grid interconnection. Transmission queues in the US now span 5 to 7 years. You can't buy your way to the front of that line. IREN has a pipeline of 3.1 gigawatts. Let that number sink in. The crown jewel is Sweetwater 1, a 1.4 gigawatt hub in West Texas scheduled for energization in April 2026. This is the unindexed data point. The market is waiting for the switch to flip to believe it. We've positioned ourselves before the lights go on. IREN doesn't rent. They are the landlord. Unlike competitors like CoreWeave, who often lease power from firms like Core Scientific, IREN owns the ecosystem. They own the land, the power rights through renewable grid interconnections, and the PPAs. They own the sockets. Now, let's talk about the hardware expansion, from 23,000 GPUs to 140,000 by the end of the year. That's a 7 times multiple in capacity in under 12 months. Most analysts are doing lazy, linear modeling. They're looking at last quarter's install rate and projecting it forward. They're missing the point. When you have the power and the Microsoft contract, the hardware is just a logistics problem, not a demand problem. Look at the unit economics. In Bitcoin mining, you're fighting a global war of efficiency. In AI cloud, IREN is seeing hardware profit margins of 98%. These aren't miner margins. These are software-level economics inside a physical infrastructure business. Look, IREN isn't just a data center company. They're proving they can dominate all 3 segments of IaaS, infrastructure as a service. For the uninitiated, IaaS is the picks and shovels of the digital age. It's the business of renting out fundamental compute, storage, and networking over the internet, so companies like Microsoft don't have to build their own power plants. Right now, IREN is executing across the 3 pillars that actually matter: AI cloud, GPU as a service, renting high-performance clusters, like those GB300S for training the world's biggest models; colocation, providing the empty shell, the liquid-cooled, rack-ready physical space for enterprises that want to bring their own hardware but need IREN's power. Build to suit, designing custom, vertically integrated facilities from the ground up for hyperscalers. Most companies can do one. IREN owns the entire stack. That is the definition of a structural moat. As companies like OpenAI increase output costs, we saw ChatGPT 5.2 jump to $14 per million tokens. The underlying unit economics of the hardware become the only thing that matters. So, where's the stock trading? IREN trades at around 20 times TTM sales, but the forward-looking multiple is the real story. Consensus 12-month forward price to sales is around 8 times. Compare that to the peers. CoreWeave went public in 2025 and trades at roughly 12.8 times sales. Private AI infrastructure startups are commanding 20 times to 30 times. That is the arbitrage. You're buying CoreWeave grade assets at a Bitcoin miner discount. This is a classic case of market misclassification. Oracle recently reported that its IaaS revenue accelerated from 55% to 68%. The market rewards that growth with a $500 billion plus valuation. IREN is playing in the same sandbox with better power access. Eventually, the capital flows to where it's treated best. Here's the setup. Short interest is sitting at around 15% of the float. The index and chill crowd and the algorithmic funds are still shorting the Bitcoin proxy. They aren't pricing in the infrastructure pivot. We have Q2 earnings on February 5th. That could be the spark. If IREN confirms the Sweetwater timeline and updates guidance based on the Microsoft revenue, those shorts are trapped. I'm here to look for alpha, and you don't do that by ignoring risk. Execution risk. Building 1.4 gigawatts isn't a Lego set. If Sweetwater gets delayed from that April 2026 target, the market will punish the stock. Dilution. Scaling to 140,000 GPUs costs billions. Even with Microsoft's $1.9 billion prepayment, they may seek further capital. Correlation. With a high beta, if Bitcoin crashes tomorrow, IREN likely goes down with it in the short term, regardless of the Microsoft contract. I look for fundamental dislocation between public perception and physical reality. IREN checks the boxes. 3.1 gigawatts of power, a $9.7 billion Microsoft contract, and a path to $3.4 billion in high-margin AIARR. IREN is a high-conviction position for me, but I'm not investing in IREN for a 10% pop. I'm holding because I believe the repricing from miner to hyperscale utility is an asymmetrical investment of 2026. The world doesn't run out of power. It just runs out of cheap power. Secured, grid-connected power is the new oil. And right now, IREN is sitting on the largest untapped well in the sector. The market is lazy. It's looking at Bitcoin while IREN is building the backbone of the AI internet. You just watch me break down IREN using real contracts and institutional logic. Most people want the return without the research. If you're the exception, if you're ready to look where the market won't, subscribe. Let's build something unindexed. See you in the next one.